Hello everyone, 16 years providing housing loan and mortgage services. I'm Katsu Sekine, a financial planner. Speaking of people, ranking of student employment companies are trading company and banks. The top 10 most popular job hunting companies 10 years ago. The top 10 are Mitsubishi UFJ Bank 4th and 9th, Mitsui Sumitomo Bank. Meanwhile, 2019, Mizuho Bank announced a reduction of 19,000 and Mitsui Sumitomo Bank announced a reduction of 5,000. Over the past few years, the financial system changed significantly. Along with that, bank has disappeared from the popular company ranking. Oxford University announced in 2014 occupations that will disappear in 10 years, ranking that will disappear. There are 4. The 10th, account operator, the 15th, security broker, the 17th, loan officer, and the 20th, contact person. The probability of losing these 4 operations is 95% to 99%. The reason why these occupations will disappear is, of course, due to the rise of AI and robots. Today, I would like to explain why the number of loan officers in the bank, which are in the top ranks of this lost occupation, will disappear. In the first place, there has always been a computer review in bank loan screening. Research began in the 1980s and has been used since the 1990s. It has been used in earnest since the 2000s. It was mainly used for a loan to companies. There was a scoring system in which the amount of money that can be financed, interest rate or something like that, when entering the company's financial statement data. At the time of the Lehman shock, the bankruptcy of companies lent by the scoring system was one after another. So it was necessary to look not only at the financial statement, but also at the corporate value. As a result, the scoring system that had been used for a period of time was no longer used. However, after the establishment of the bank in Japan, the period of high growth and the period of bubble continued. For that reason, the era of making money on the backside has continued for a long time. And the bank loan officers haven't changed the idea of lending to a large company or lending to a surplus company. It is the rise of AI that has greatly changed the flow of loan screening. Previously, it was based on simple tasks such as sales, profits, and changes in borrowing that can be seen from the financial statement. AI big data is judged from a completely different perspective. For example, there is a company called Cabbage in Atlanta, USA. This company is a company that provides unsecured loan to SMEs. A company with a system that completely all applications online and takes 10 minutes from application to payment. You can borrow at the speed that cannot be imitated by a general bank. But the great thing about this company is the screening method. This is completely different from the computer-based scoring system used by Japanese banks. The first thing to look at when reviewing Cabbage is the contents of online service provided by SNS. Software developed and sold by the company and SNS published by companies that want to finance. AI collects and analyzes all of these online data. And the company's financial statements are also obtained from the online cloud. From there, the financial situation of the company is judged. And from the online service, the company's sales and money usage are judged. In addition, SNS determines how the company and customers are related. Based on these data, it is judged how much the company is trusted by customers, and the loan is decided just 10 minutes. Such a new method of judging from a new point of view and such a speedy mechanism can be done by a state-of-the-art fintech company. It is not possible for an old Japanese bank. And in the first place, there is a reason why bank has to reduce their workforce. A major reason is the rise of online banks, competition for cheap fees, and mortgages rate is fierce. Also, if a company wants to make a capital investment, it used to borrow money from a bank, but now it may issue corporate bonds or have an investment fund invest. Current investment rates are globally low. Building an old business structure in American and European banks has become difficult. For more than 10 years, we have been restructuring the number of stores and restructuring contact managers. Considering that the work has been done in the US and Europe for more than 10 years. But in Japan, Japanese banks may have been slow to prepare for the restructuring era.